Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cardinal Health Inc. quarterly report. Cardinal Health Inc. offers a diverse range of businesses and services across the healthcare industry. Some of its key offerings include distribution of pharmaceutical products, branded and generic, specialty pharmaceutical services for manufacturers and providers, pharmacy management services, to hospitals, repackaging of generic pharmaceuticals, and over-the-counter healthcare products manufacturing. Sourcing and distribution of Cardinal Health, branded medical, surgical, and laboratory products, supply chain services and solutions for hospitals and other healthcare providers, assembly and sale of sterile and non-sterile procedure kits, radiopharmaceutical manufacturing, preparation, and delivery, direct shipment optimization through integrated technology solutions. The skyrocketing stock price of Cardinal Health Inc. A year of strong growth. Cardinal Health Inc. CAH has experienced a remarkable 77.45% increase in its stock price over the past year, driven by a combination of strong financial results, strategic initiatives, and optimistic analyst outlooks. The company's success can be attributed to several key factors. Firstly, Cardinal Health has consistently delivered impressive earnings reports, exceeding market expectations, with adjusted EPS beating consensus estimates. In addition, the company has raised its guidance for fiscal year 2026, projecting significant growth. This positive trend is evident in quarterly results, including a 22% year-over-year increase in sales and a 9% rise in non-GAAP operating earnings. Strategic acquisitions and expansions have also contributed to the company's success. The acquisition of Solaris Health and plans to build new distribution centers demonstrate Cardinal Health's commitment to growth and modernization. Furthermore, initiatives aimed at increasing shareholder value, such as increased quarterly dividends and share repurchase programs, have been well received by investors. The positive sentiment among analysts has also played a significant role in driving the stock price upward. Several financial experts have upgraded their ratings and raised price targets, citing promising future earnings and management performance. With a consensus rating of buy or strong buy, Cardinal Health stock is poised for continued growth. In conclusion, the collective efforts of strong financial performance, strategic growth, and positive market sentiment have propelled Cardinal Health Inc.'s stock price significantly upward over the past year. As the company continues to execute its growth strategy, investors can expect further gains in the future. Revenue growth and decline. Key drivers. The primary drivers of revenue growth or decline can be identified through a review of financial summaries. Revenue growth is primarily driven by significant increases in net sales, with notable examples including a 37% growth rate and an increase from $52.28 billion to $64.01 billion over the course of 1 year. On the other hand, revenue decline is largely attributed to a decrease in net income, which fell by 6% compared to the same period last year. This suggests that while revenue may be increasing, profitability is not keeping pace, leading to a decline in overall financial performance. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant fluctuations over the past 2 years. In CONE fiscal 2026, net earnings rose by 9% to $454 million compared to the previous year. However, this growth was short-lived, as net income declined by 12% in Q2 2025 to $434 million. A more pronounced decline occurred in Q3 2024 and Q2 2025, where net income decreased significantly from $416 to -$5,963. This drastic drop suggests a substantial decrease in profit margins during these periods. The exact percentage change is not explicitly stated, but the magnitude of the decline indicates a substantial erosion of profitability. The reasons behind this shift in performance are not immediately clear from the provided data. However, it can be inferred that factors such as increased costs, decreased revenue, or changes in market conditions may have contributed to the decline in net income and profit margins. The company's debt level has undergone significant changes over the past quarter. In CONE fiscal 2026, short-term debt stood at $2.5 billion and long-term debt was $4.3 billion. However, by Q2 fiscal 2026, long-term obligations had increased to $8.98 billion, a 13% rise from the previous year. Unfortunately, there is no information on short-term debt in Q2 fiscal 2026. As for interest expenses, they are not explicitly mentioned, but it can be inferred that they will likely increase with the rise in long-term obligations. The company's financial performance reveals a mixed bag of results across its segments and regions. The pharmaceutical segment stood out as a strong performer, with a 5% increase in revenue to $34.3 billion. In contrast, the medical segment lagged behind, with only a 2% rise in revenue to $10.5 billion. Furthermore, the company's net income took a hit, plummeting by 12% from Q2 2024 to $444 million. These divergent trends suggest that while some areas of the business are thriving, others require attention and improvement. Management is expressing optimism about the company's future prospects, citing continued revenue growth driven by its diversified portfolio and strategic initiatives. The company expects full-year 2025 revenue to reach $175-$180 billion, with net income projected between $1.75-$2.85 per share. This outlook suggests a positive trajectory for the business, but lacks specific details on strategies or plans to achieve these goals. Acquisitions and divestitures overview. The company has made several strategic moves through acquisitions, but with limited details provided. Notably, a physician practice acquisition was completed within the quarter. On the other hand, no divestitures were mentioned in the extracted summaries. This indicates that the company is focused on expanding its operations through targeted acquisitions rather than selling off assets. Based on the financial summary, it appears that the company has engaged in share buybacks, as indicated by the negative figure of -$378 on page 3. However, there is no mention of dividend payments or declarations, suggesting that the company has not paid dividends to its shareholders. That concludes the financial summary for Cardinal Health Inc. Feel free to comment below, and I will be happy to answer them when possible.